unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
Good morning. Welcome to another episode of Insider Exchange. Welcome to Market Matters, live streamed every Monday for your viewing pleasure. And of course, with the rest of the show coming up later in the week. On Market Matters today, we are going to be taking a look at the year that has been thus far. We're going to do a recap of the first 6 months of the year. It has only been 6 months, even though it's felt like a lot longer. We're going to look at that, and we're going to try and make sense of what could potentially lie ahead in the next 6 months. And then in the deep dive, we're going to be taking a look at Stokvels. It is savings month coming up in the month of July. We're going to kick things off for savings month with a look at Stokvels and how you can best use those sorts of financial tools. And then we're going to wrap up the show with our investor insights, taking a look at some interesting developments from the team at Eskom, but we'll come back to that. They seem to be delving into the world of crypto mining. Before we get to that, we're back to our usual selves. I'm Jimmy once again, and Simon is once again Simon.
Who knew?
There we go, right? We figured we'd go for the classic look today because, well, it's one of those days. We're feeling that kind of way. And
I was going to say it's Monday, but it's always Monday.
It's always Monday. But it is also Durban July week. Lots happening there. Morning, Jimbo. Morning to our community. Shout out to everybody that is joining our chat on YouTube and our live chat. But yes, back to the Durban July. Have you decided which car you're going to rent?
No, I have no idea how I'm going to get there. It's Durban. It's small. I mean, technically, you could walk it in, I don't know, 20 minutes maybe.
That's a serious power walk right there.
Is it? My sister's in Greyville. I mean, you might well be right. Yes. No, I have not. No one came forward and offered me a nice little thing, so I have to find my own transport.
Anyone out there still wanting to pick up Simon for the Durban July? Let us know. He's more than happy.
Has to be in proper like
Durban July fashion, right?
Yeah.
Right.
No, like I'm coming in a mini or something like that. Like no.
Okay.
So how long would the walk be? Let's see. Directions. Okay. Take an hour.
Unless you power walk through it.
I don't power walk anywhere.
Don't power walk anywhere. Mid-year recap. It is only halfway through the year.
Sure.
Even though it feels like we've gone through two
Everything
financial years, and it's I'm tired.
I'm tired too, but markets are, I mean, it has been, right? And then Besant on Friday implied that the deadline, which is next Wednesday for the 90 days extension to the thingy-majig back in April, he implied that was getting kicked down the road to September because they haven't signed any big, beautiful trade agreements, and they was going to sign 90 in 90 days. And they kind of got one with the UK and kind of got one with China, but they're not big, beautiful, all signed, importantly. But markets are like, yeah, that's fine. I mean, S&P and NASDAQ, all-time highs on Friday. The NVIDIAs are back at all-time highs. CrowdStrike, even Nike was up 15%. And our local market is 88,700 also at all-time highs. So we are like, don't worry about it. Everything seems to be fine. The rand is strong. Gold is 3,300. PGMs are running.
I've got a perfect summary for this. And this is a conversation I had with the team at Sanlam Investments that summarizes the first 6 months. And it is a taco trade. Not the food taco, but taco is actually an abbreviation, an acronym-ish of sorts. And it's Trump always chickens out.
Yeah.
It's a proper investment term. You can Google it. Investopedia has it and everything. And I was just like, this is probably the best summary of what we had.
There's two things to Trump. One is he always chickens out, and he's done it with all the trade things and everything. And you know, he bombs Iran, and then it's like, done, cool. It's like, but absolutely, and on all the tariff stuff, absolutely, chickened out left, right, and center. What he also always does, he always says in 2 weeks. Remember his big infrastructure bill, his
All of his big, beautiful bills.
It's always in 2 weeks, in 2 weeks, in 2 weeks. So the short answer is expect lots of fiery words, but nothing else coming out of the White House.
Nothing coming out of the White House. Not even...
Well, I mean, look, we have to also remember that we are currently sitting on 10% tariffs for everybody across the board, which is, pretty much taking the average tariff rate back to Smoot-Hawley in the 1930s. So it's not that the tariffs aren't insignificant. They netted, I forget which month, was it May, some 20 to 30 billion in income for the US Treasury, which of course means that American citizens paid 20 to 30 billion more for their whatever it was that was coming through. But yeah, I mean, it's just a non-starter.
So
it is a taco trade.
It is a taco trade. So the markets have been filled with those for the whole year. And as you've just given a great summary, Si, everything's back to as if nothing had happened, right? As though, as you said, you and I spoke about this, and you had said, if you had gone to bed in January, gone into a coma, and somehow woken up today, it would have been as though you've missed absolutely nothing, because markets are still at the levels that we expected them to be for the year. And it looks as though all of the volatility has been wiped out. What does that then mean for the second half of the year? Does it mean markets, number one, are more understanding of how Trump could be unfolding from a presidency perspective? Or are markets just saying, we're going to choose to ignore certain things until we have concrete facts? Because speculating now seems to be driving us mad and not really the person causing the speculation.
Yes, I mean, 100%. There is, however, a problem, which is I'll take you back to October, sort of November, maybe even January of this year, which was valuations. Not local, but US market valuations. Your NASDAQ was at like the top 5% quartile. I mean, it was absolutely insane. Even the S&P was just out of bounds. And if you remove the Mag 7 from the S&P, the Unmag 493 were not cheap either. So we're back to the concern around valuations in an environment in the US where inflation is going to be higher, the dollar is going to be weaker, although they don't all necessarily mind the weaker dollar, because the other big story is the dollar's down 12 or 13% year to date. And of course, lower GDP. Now, Trump's got a plan for all of this. This is all part of his big master plan. But I don't think we can... the tariffs are on pause, that's fine. Trump's probably not going to do anything to hurt the market from here on out, but it's still there, and we still got the challenge of valuations.
I think he's going to try and hurt the market, but I don't think that he can do anything that the market isn't fully prepared for, given what has happened. So I think he's probably done the worst to the market. But that being said, I don't want to push the man.
No, we should not be trying.
You don't want to push the guy with the nuclear codes.
Yeah, 100%, absolutely. But it is, and I mean, it does mean, basically, it goes back to your point. If we had taken a nap for the last 6 months, we would have been like, so Trump's all like just like napping in the White House. We were down close to 20% in April. The 10-year at the US was over 30. Our rand at one point was 19.90 to the dollar. Now we're 17.70 and change. It kind of looks like it's just been an absolute doodle. It hasn't. I suppose the question is, do we get more, and by we I mean markets, do we get more sort of comfortable with Trump and his crazy pronouncements? And if the answer to that is yes, and surely we do. I mean, surely we understand the taco trade. Surely we understand there's a lot of bluster and craziness, but that broadly...
How many days are we left with?
Oh, I stopped counting. I'll get that to you.
So why you look for the days? I mean, I agree that in part... the impact that Trump is going to have on the markets might be lessened in terms of just the extreme volatility that we've been seeing. And that's just purely because markets have learned to adjust to the volatility. Not to say that they've chosen that the volatility is not there. Markets have learned to interpret it better than what which is good, because it tells us then that after one full presidential term and possibly 200 days into the second presidential term, we kind of have an idea of the kind of president we're dealing with. And he does, unfortunately, remain the focal point because of the size of the US economy. But as you said, things like valuations start to become very topical to discuss now, because markets like China, that have historically been undervalued and have been deeply discounted, start to come back into favor and start to look very attractive again.
Yeah, 1,300 exactly.
Days left.
Yeah.
That's a lot of days.
We haven't even done 200
That's
yet.
a lot of days.
It's a lot of days. It's a lot of days. So, I mean, to your point around valuations, I mean, Germany, I mean, Europe has been the perennial, lots of promise but no delivery. And that's been Europe now for
several decades.
But I mean, they just off highs. Germany's just off highs. France has pulled back a bit. FTSE's doing nicely. Nikkei's back above 40,000 and looking good. ASX just off highs. Nifty 50 India looking good, just off highs. So everyone's up there. It's just the difference is when the S&P and Nasdaq are at all-time highs, you're like, ooh, those valuations. When Europe's at all-time highs, it's like, ooh, those valuations.
Okay, so now, when we look at that picture, every market or most markets are just off all-time highs, and we kind of sit there with the question of go back to the 2008 financial crisis kind of vibes. Things were at all-time highs before the market crash. Are we still having conversations about a market crash? Is that still something that's on the cards? Or markets just sitting there saying, we actually want to push higher now because there's no need for a crash? Valuations are resetting. Where do we stand on the recessionary talk?
So recession seems off the table for now, but certainly lower GDP is baked in, and I mean every forecast, IMF, World Bank, everyone is saying, look, it's going to be lower GDP. We just need to get used to that for now. Recession seems off the table for now. It absolutely does. I mean, and when the liberation tariffs and stuff were coming out, recession was very much on the table. But a 10% tariff is manageable. You know, the producer will swallow some of it, the retailer will swallow some of it, the importer will, you know, and then the consumer 2.5% each. Say it is a manageable process. So yeah, I mean, are we staring at recession? Probably not. Are we staring at market crashes? No, because market crashes don't happen from highs, they happen from lows. Market crashes are capitulations. And even if you look at the crash of 87, there'd been strong selling. If you look at the 2008, 2009, markets had been selling. Then we had that week in October where the bottom just fell out. Crashes happen from capitulation, so they happen from lows, not highs, typically oversold positions. That said, do we go into a bear market? And at this point, I don't see what takes global markets into the bear.
Okay.
I mean,
not the wars, not...
No, apparently not, right? I mean, I hear you. No, I mean, to be clear, wars in Europe and two wars in the Middle East and etc. and gold at 3,300 and all of this sort of stuff, you would think to yourself, but apparently, nah.
It feels like we're in uncharted territory. This feels like something that we haven't experienced before.
And that's a great, actually, observation, because in a sense, we are, I mean, totally, this is Trump 2.0, but like it's different from 1.0. We are in uncharted territory. The fact that our current investment strategies that the President of the United States always chickens out is uncharted and, frankly, spooky.
And the spookiness is what worries me, Sai. The spookiness is worries me because... when does the other shoe drop? How long do we ride the wave for? These are the questions that start to come up going into the second half of the year, saying, okay, fine, let's say we have momentum to finish out the year strong. If we're near all-time highs or at all-time highs, it's safe to say then that at the end of the year we will have new all-time highs, whatever those highs might be, right? But then what keeps driving the momentum? Because if the world is slowing down from an economic standpoint, GDPs are slowing down, the wars aren't easing up, what then drives us to continue doing well? That then points us back to those unsustainable valuations that we were already questioning in the US.
Yeah.
Does that then not happen in the rest of the world, and then we have a bigger problem on our hands?
I mean, the rest of the world's a long way from US valuations. In some cases, Europe could double and it would not be at US valuation.
Yeah.
You know what I think triggers it? How about NVIDIA misses?
Okay.
Earning miss from NVIDIA.
Okay.
Big earning miss from NVIDIA. No one's buying AI chips. AI is not going to be the everything just starts to, because it's not then just your Amazon and
The FANG stocks and all of those.
all
No,
of
no,
those
yeah.
that suddenly get tanked out. It's also Walmart who's spending on it and stuff. And suddenly, if NVIDIA has a big miss because of AI chips, then it's a case of like, well, hang on, we're going to get all this productivity, but is it real? How does it all work? And then suddenly do we start to see pain and suffering?
So there was an interesting thing that I saw. I saw it online around the lithium space. Lithium deposits in the Ukraine have been seized by Russia amidst all of these war tensions and things. Now, doesn't seem like much. I mean, the deposits still technically belong to the Ukraine. They're a sovereign state, etc., etc., etc. But when you look at lithium deposits and the role they play into industries like NVIDIA, into markets like Tesla and the battery conversations and the batteries that power the AI chips and all of those sorts of things, and you then say, if we're having kind of a battle for resource, those rare earth metals out of China are one thing. But lithium is another one, right? Now, of course, we don't know the extent of what's happening. Neither of us are in the Ukraine on the ground, whether or not, they're going to get this back or not. But this was a facility that, if I'm not mistaken, was owned by BlackRock, which already tells you
Which is
enough information about
weird,
that.
but okay, carry on.
And apparently there were ex-US mercenaries hired to protect the facility. So whether or not they take the facility back or not, or how much truth there is to this whole conversation, that then also becomes an interesting conversation to look at, because that then means control for resource doesn't just extend to things like wars, but to what then drives the economies, what then drives the movements forward. Because NVIDIA can keep producing the chips, like you say, but if no one's buying them, then what are you going to do with them?
Yeah, and interestingly, I mean, the whole resources thing is again part of Donald Trump's plan. I mean, it's why I think South Africa, notwithstanding, he says, so what he wants farm murders to be priority crimes, and he wants no compensation, et cetera, et cetera. But we have minerals, and that whole peace deal he's claimed to have brokered in Central Africa is minerals. His whole thing with Ukraine was minerals.
So my thing is, we've seen this playbook. This is not uncharted territory. We've seen this happen from the United States. Every single time there is a mineral resource, whether it's oil or other minerals, that a particular country might possess more than others, 9 times out of 10, the US says, hey, you guys need to be liberated. We don't like your leadership. Perhaps let's assist you. Here's a couple of soldiers. Here's a war. And we know how that all works out, right? We saw Iran, Iraq, Libya. The list is, quite frankly, very long at this point, right? So that's one conversation that doesn't need to be elaborated on or explained. And the US can come out and say, no, we've not done this. We've done this in the interests of the global communities and all of that. But you look at that, who's really benefited from it? It's not the people that have been invaded.
Correct.
Right? But we digress. This is not a political show, but we will answer one political question. Jimbo wants to know, if the next president of the United States is a Republican, do we think they will continue with Trump's policies? Now, my viewpoint on that is, Trump doesn't know Trump's policies, much less the Republican Party knowing Trump's policies. So I don't think that's likely.
I mean, yes and no. If you read Project 2025, pretty much he's largely sticking to that playbook. I didn't read all 900 pages. I read a summary. Thank you, ChatGPT. Yes, I mean, so what are Trump's policies? Weird, wild, woolly, and completely confusing. Could the next president continue that? Sure.
Would it make sense, though? So, again, I think with something you and I have spoken about, I don't know if we've had this conversation on the show, is for presidencies, a lot of it is around legacy. What will you be known for when you leave, particularly the Oval Office, right? And that's one aspect of it. But what's very clear with the Trump conversation, and that's been the theme for the last 6 months as well, is I'm setting up my life for post-presidency, right? I'm setting up the Trump Tower in Dubai as an investment conversation that I'm having with international investors or with trade talks or bilateral relations with countries, but somehow the Middle East is giving me Trump Towers when I leave office, and we're building those sorts of things. This is one person using their political office and their power as the president to set up their personal life. Now, yeah, when other people do it, we frown upon it and we talk about it and we call it names.
We call the banana republics.
Right, we call it other names. When someone else does it, from the comfort of his orange tan, then we're okay with it. You know what I mean? But whether or not someone continues with the policies, I suppose then depends on the candidate that follows.
Depends on the candidate, but I think you're right. But I mean, a lot has been broken. That's going to be a long way to get back to trust. And I think even if we got a Democratic president in next time, they would have moved more to the right. And at some point, we will get more Republican presidents, and we just don't know what they will do. I mean, there was a sense of, I've said it before, where it turns out that democracy was a lot more about norms than actual regulations. And that has been completely shattered, and it's left the whole rest of the world like a little bit stunned. And so it gives us less odds to know what will happen. And, you know, the Paris Accord, Obamacare, those sort of things went in, and, you know, Republicans didn't like it, but there was a sense that they would be there, and the new Republican administration might tinker with it, but now they just throw it out. So now every 4 years, new president, you're in, you're out, you're there, you're other way, and everyone else is just like, yo, you guys, do you go play in the small room, work it out, we'll let that out.
It. To be fair, this is the same Republican Party that was brave enough to say, yes, we want another 1,500 odd days of Donald Trump after the first 1,000+ days that we had. So the fact that he's being re-elected in the first place is already something that makes us question what Republicans were thinking around that.
Well, there's a quick theory out there, and again, let's stay away from politics, but MAGA, instead of MAGA, it should be Make America White Again. That's his base.
Make America Mawa. That's where we're going to leave it. That's the Market Matters for this week. Mawa, according to Simon, Make America White Again. But yes, stick around. The deep dive and investor insights will be dropping later in the week. Thanks for tuning in to Market Matters. We're going to leave it on that note. Jimbo, we are so happy that you resigned of your own free will and you are happy with that resignation. He said it was time to go.
Okay.
We wish some other people in the world would take that advice, but we're going to leave that conversation on that note. That's Market Matters.